All right, good morning. Welcome back here to Trader Money. Great to have you aboard. There's some big news out there here this morning, and it's a key driver in what's happening in the market out there. We are seeing the market futures down about 20 points. They're well off their lows, but still down 20 points here, and really comes down to Apple. And after the bell yesterday, Apple did an earnings pre-announcement. And when companies are going to pre-announce, their stock gets halted because they generally will pre-announce only when there's something really bad or when there's something really good, where what they have to say is nothing to do with what their estimates are. It doesn't take too long to figure out that Apple, it was bad. Yeah, it was bad. They're going to have record earnings per share this quarter, but their future revenue guidance was absolutely slashed, and it has led every analyst and their dog to say something about Apple this morning. And you can see right here, Apple price target lowered from to 160 from 210 at Wells Fargo. Apple price target lowered to 153 from 215 at BMO Capital. It is just an absolute bloodbath of downgrades after that miss. Now, what's the big deal about the miss? Well, Morgan Stanley nails it right here. Was the company's first negative warning in over 15 years. I mean, Apple just has an absolute stellar reputation for never having to do this. Most companies can't say that. And for Apple to come out and to do that is pretty massive, is pretty new, and is something that is going to tarnish their reputation going forward. It is something that is going to make Apple trade at lower PE ratios going forward. And is something that brings a lot of questions. In fact, Goldman Sachs this morning went as far as to say, and let's see if we can find it in here. There's just so much. Here we go on Goldman Sachs. They don't mention it right here, but in their full investor note, Goldman Sachs compared Apple to Nokia back in 2007, 2008, where Nokia was dependent on this upgrade cycle for phones, and when an economic recession hit, people stopped upgrading their phones so much that really hurt Nokia. And they're comparing Apple to Nokia. Now, Apple has a lot more going on for it, but when you drop your revenue guidance by over $5 billion, that's a huge number, and a lot of that has to do with Apple having seeing a further slowdown in China than what they had previously expected. There is one analyst out there who actually upgraded Apple on this, and they are an analyst who had Apple at a reduce, and they upgraded it to neutral, and it was analyst at New Street, and most of you probably haven't heard of that, New Street, but New Street analyst Pierre, and I'm not going to try to pronounce that name, upgraded Apple to neutral from reduce, saying the news is as bad as it can be, and the thesis is fully played out. Well, they're about the only one who's been right on Apple, and they're the only one with a little bit of a different voice on Apple here this morning. Most analysts are having to be very reactionary and very dramatic in how much they cut their price target. But this happened after the bell yesterday, and the bottom line is, what did S&P futures do when this came out? Well, let me show you. S&P futures fell, and here Apple's going to get halted, and Apple reopens, and S&P futures give up most of their gains. In fact, overnight went back to where the market was yesterday morning. Pre-market, and futures kind of sat down here. Now, futures have rallied about 20 points in the last 2 hours as they've pushed on a little bit higher here. My apologies. As you can probably tell, I have a little bit of the sniffles, so trying not to have too much of that come through on the mic, so my apologies there. But overall, Apple drove S&P futures lower. Now this morning, and it's not as widely reported and everything else, but we saw Boeing's numbers cut here this morning. And you can see Boeing, dropped on that. They're trying to come on back a little bit here. But there is a lot of, this is going to be something where, we talked about the market in terms of the rallies that the S&P had last week, these 100-point rallies, and how, we showed kind of how historically those type of rallies, they don't happen at the end of a bear market. They tend to happen in the middle of a bear market. Now, they could be a catalyst for a strong bounce and everything else, but they tend to be in the middle, not at the end. Excuse me there. But they tend to be in the middle, not at the end. And what tends to be the driver? Well, one of the drivers that, the Bears could get going forward is this cascade of earnings guidance drops. Now, we didn't see it out of Nike. In fact, when we hear what's going on with Boeing and we hear what's going on with Apple, it makes Nike even nicer in terms of the news and what's going on. But overall here, we are talking about an earnings season that could see many more of these pre-announcements. In an earnings season that we could see a lot of companies just basically blame the environment and come out and put all their dirty laundry into the earnings report. That way, they don't have to worry about it going forward. And that could be a big weight on a lot of shares out there in the market. But you listen and you read up on, or you take a closer look as to the whys on Boeing and as on Apple, on FedEx, and some of the whys on these companies that have these misses. And it really comes down to the economic slowdown due to the trade war, right? That's what it comes down to. And so it's not a situation that can't be solved. It's not a situation that can't turn relatively quickly and really start to ramp back up in a very bullish manner. It hasn't yet, but it is something where a small catalyst could create that. And that's one of the things the market's going to have to be wary of, have to be on guard of, as it goes forward here in the next day, in the coming days and weeks. So what does this gap down mean here today? Well, yesterday we saw a lot of kind of bullish engulfings. I decided that I did not want to buy into those until this morning to see kind of how they played out. Some of that, as you can tell, is me just expecting another big leg down on the market. I feel like it's a little early for it to happen. But, it is one where I did mention if we gap down a little bit this morning and start to see some strength, that could be a nice buy opportunity for some of these bullish engulfings. I do think Apple changes the story for a lot of names out there and becomes a noose around the neck for a lot of names out there, specifically some of their suppliers, some of their retailers, some of the companies like a Verizon or a Best Buy more specifically there than a Verizon. But it is one where some of those names are probably probably not worth really taking too close of a look at. But I will have a look at, some of the Bank of America action. Bank of America set the gap down about 1% this morning. Some of the action in some of the energy names. And, where some of that is opening up, and more specifically where some of the option values are ultimately, we do see the VIX up pretty sizably this morning. For a 20-point move down, that VIX is up pretty good. In fact, that is something that, does, if you're bearish and you're looking at this morning open, you go 20 points, okay, big deal. 20 points comes and goes in 10 minutes. But seeing the VIX up, up another $1.80 this morning, that's a fairly big deal here. And, as we look at the VXX, or more specifically at VIX futures, it's very clear that the market is not pricing in lower volatility going forward. In fact, in some cases, it is actually pricing in higher volatility going forward, and we have not seen some of that contraction element really come into play here just yet. I do think there's an interesting story to be made for shorting, some names out there if yesterday's lows are broken. Granted, Apple's breaking yesterday's lows, but it's going to be down about $14, about almost 10%, about 9% here on the open this morning. The options are going to be pretty insane, and I'm sure the price action equally. But I would not be surprised to see Apple take another shoe lower, another drop lower here early on this morning. But outside of, the Apple and the Boeing, really there's not a lot of other drivers that are out there. There will be, though, here a little bit later today, and that is with the ISM manufacturing report. Now, before we go and talk about that, the ADP employment report did come out this morning. It was a strong number. We did see S&P futures move higher on that number. It came out at 271 jobs created. It did lower the prior number just slightly, but absolutely blew away the consensus number. And so, it is something where we have the government payroll or government jobs report tomorrow, and, combined with Chairman Powell speaking. So those two will be very interesting catalysts tomorrow. But we have this we have the ISM manufacturing index about 30 minutes after the market opens here this morning. It is something where when we see this number slowing or showing a little bit of slowdown, we tend to see the market have some serious issues. When we see it improving, market tends to do pretty well. And, we've seen slowdown 2 of the last 3 months. Last month, it actually propped up a little bit. And, we saw the markets continue to sell, but, have stabilized a little bit, I guess. But, this number here this morning, I think, is a very important number, especially on the heels of China manufacturing, not last night, but the night before. And if this number is fairly negative, it could only, reignite some of the major fears that are out there. Will it be enough to quell some of the fears that are out there? I think to some degree, yes. But, the market is going to really start looking closely at these earnings guidances and, what this means, what Apple, what Boeing, what, even what we saw from FedEx, what this all means for many of the companies set to report. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.